Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Thursday, 15th day of September, 2016, and we are looking at a U.S. equities markets that's had one of the greatest roller coaster rides in terms of consecutive triple-digit days, upside, downside, upside, downside. In other words, key reversals each and every day. Today is one of those upside moves, 18,212 on the Dow Jones Industrial Average, up about a full percent on the day. It is quite impressive, up 177 points. Now, not to be undone, when we look at the Standard & Poor's up over a full percent, 1.17%, up 24.5 points, trading at 2138 on the day. However, it's a NASDAQ that seems once again to be outperforming sectors or indexes, I should say, as we've got almost over a 1.75% gain in the NASDAQ when we look at the mini NASDAQ 100s at 4812 on the day. So traders, to say that equity investors and traders have been on an extreme roller coaster ride is an understatement. Looking at a daily chart, standard candlestick format, take a look at this drawdown. This occurred a week ago Friday. Of course, today being Thursday, on Monday, we pretty much saw all of the gains that were eroded on Friday given back, although we hit a lower low at 1800, and I do want to touch upon that in a second. The following day, of course, this being Tuesday, we had another dramatic downside day. Yesterday, we had a nominal downside day, and today we had a sizable recovery in the market. And so we've got this alternating candle color that is really not defining any kind of a trend. If you look back historically at market activity, you have had points where it's had alternating candle colors, such as here and such as here. But the alternating candle color did not come with the type of dynamic range that we have seen recently. Look at these highs, 18,400. You've got a 400-point range in the Dow Jones Industrial Average. That is extreme. Traders are betting. They're betting with a lot of dollars, but there's no real conviction here in terms of a defined turnaround. Now, in terms of a candlestick pattern, there is a candlestick pattern that we can identify, and that pattern itself is simply called a tower bottom or tweezer bottoms. You've got both of the criteria for that. Now, for tweezer bottoms, you have to have equal lows, and you get that here. A tower bottom, however, is when you have a series of candles that roughly form some sort of base, and you're getting that base here. And so you can define the most recent activity as a tweezer's bottom and a tower bottom. So traders, the next chart I do want to look at today is the Standard & Poor's E-mini futures. I do have two moving averages, although they're not really coming into contention, so to speak. This long black one, there's our 200-day, and this, of course, is our 50-day moving average. Now, the move on Friday was a solid break below the 50-day moving average. We do have support at a 38% retracement point. This retracement point is roughly 2,100. It correlates to 18,000 in the Dow. And really, to get bullish in this market, I'm going to need to see it move back above the 50-day moving average. To believe that we have some sort of a correction in the making, I would need to see it break below 2,100 on the Standard & Poor's E-mini. And so traders, we have been talking about the fact that the tech stocks have absolutely been outperforming the other indexes. NASDAQ, of course, heavily weighted in the techs, 4812. Current print putting it up, as I said, about 1.75%. But traders, take a look at this weekly chart. Now, of course, the week is not done, but this is as strong of an engulfing bullish as you get. However, it's an interesting pattern because after a defined market move up, when you get this particular pattern type, because one of the definitions of an engulfing bullish is that you have a defined correction in the market, such as you have here, and then you get that pattern. Although this isn't a complete engulfing bullish, you understand what I'm saying. The first criteria is that it's in a downtrend. When it occurs like this, it is called the last engulfing bullish and is actually looked at as a bearish pattern. I don't know that that is how this is going to unfold, but I thought it was worth noting a very, very strong engulfing bullish after this defined rally. That, of course, on our weekly chart. Now, when we look at our daily chart in the NASDAQ, you've got a lot of the same, but you can see that it's quite different because when we look at this as Thursday, Wednesday, Tuesday, Monday, and this is that sell-off on Friday, we have absolutely on the NASDAQ more than made up ground and definitely at this point tracked above it, which is why when we combine this into a weekly chart, we get that engulfing bullish pattern. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.